Long before charts, economic models, or university textbooks tried to explain how the world works, one man noticed something most systems still refuse to admit. Wealth doesn't rise forever, power doesn't expand endlessly, and prosperity, if you're not careful, slowly plants the seeds of its own decline. This wasn't a theory built in a classroom. It was a pattern, observed, lived, watched, written down by someone who had seen empires rise, peak, and quietly decay from the inside. Welcome to the Capital Historian, where money, power, and history collide. And nothing is ever as simple as it looks. In the 14th century, while Europe was being torn apart by plague, war, and fragmentation, a North African thinker sat down and wrote something extraordinary. His name was Ibn Khaldun. Centuries before Adam Smith, before Keynes, before modern macroeconomics even had a vocabulary, he explained why economies grow, why states become powerful, and why they almost always collapse under their own weight. Ibn Khaldun was born in 1332 in what is now Tunisia, into a world that was anything but stable. Dynasties rose and fell quickly. Cities thrived and emptied just as fast. Plague swept through populations without warning. Power shifted constantly between rulers, tribes, and factions. This wasn't a calm era for abstract theorizing. It was chaos, and chaos became his laboratory. He wasn't a detached academic. He worked inside courts. He advised rulers. He watched governments overtax their people, mismanage wealth, lose legitimacy, and then act shocked when everything unraveled. And after watching this cycle repeat again and again, something clicked. Different names, different religions, different flags. Same story. Discipline turns into comfort. Comfort turns into entitlement. Entitlement turns into decline. What made Ibn Khaldun so ahead of his time is that he understood something most economists still struggle to admit. Economic systems aren't machines. They're living organisms. They depend on trust, on cohesion, on shared belief, on incentives that make cooperation worthwhile. And when those weaken, no amount of gold or authority can hold the structure together. At the center of his thinking was a concept called asabiya. It's often translated as social cohesion. But that phrase barely scratches the surface. Economically speaking, it means trust, shared incentives, the willingness of people to work together, sacrifice together, invest together. Ibn Khaldun noticed that societies with strong cohesion could build wealth even with limited resources. When people trust each other, they work harder. They enforce norms. They protect institutions. They think long-term. Wealth follows, not because they start richer, but because their structure allows productivity to flourish. But here's where it gets uncomfortable. Success changes behavior. As wealth accumulates, elites drift away from the productive base that created it. Rulers become insulated. Bureaucracies expand. Positions become inherited instead of earned. The discipline that built the system softens. Comfort replaces necessity, and cohesion begins to weaken. Ibn Khaldun wasn't moralizing. He wasn't saying people become evil. He was saying incentives change. When survival is no longer urgent, behavior shifts. Innovation slows. Risk tolerance drops. Extraction becomes easier than creation. The state starts living off yesterday's success instead of building tomorrow's productivity. Nowhere is this clearer than in his analysis of taxation. Early in a state's life, taxes are low. People work willingly because effort is rewarded. Economic activity expands, revenue grows naturally. Then the state matures. Courts expand, armies grow, administrative layers multiply. To sustain this, taxes rise. At first, revenue still increases. But eventually, higher taxes begin to discourage production. People work less. Trade shrinks. The tax base erodes, and the state responds the only way it knows how. It raises taxes again and again. Each increase accelerates the decline. The state isn't starving because it taxed too little. It's starving because it taxed too much of a shrinking economy. Centuries before the Laffer curve, Ibn Khaldun described diminishing returns, and he did it without ideology. He didn't argue low taxes were virtuous or high taxes evil. He argued that incentives matter. When effort feels punished rather than rewarded, people disengage. When capital is extracted faster than it regenerates, the system weakens. States don't collapse because they lack authority. They collapse because they exhaust the source of their own strength. And then comes spending. As states age, rulers grow accustomed to luxury. Public funds shift toward preserving status instead of productivity. Bureaucracies multiply. Corruption rarely begins with criminal intent. It begins with normalization. Everyone adjusts. The system doesn't feel broken. It feels entitled. But entitlement has arithmetic. Spending rises faster than output. To compensate, taxes increase. To enforce compliance, coercion expands. Trust erodes. The state spends more to get less. Sound familiar? Replace dynasties with institutions, courtiers with bureaucrats, caravans with global supply chains. The logic holds. Markets don't reflect numbers first. They reflect people. Prices move because confidence moves. Productivity rises because incentives align. Decline doesn't begin with collapse. It begins quietly, with subtle behavioral shifts. Less trust, more extraction, weaker cohesion. Ibn Khaldun didn't believe cycles could be eliminated. He believed they could be understood. And understanding removes illusion. He would not be impressed by our technology. He would look past screens and spreadsheets and focus on the same variables: incentives, cohesion, power. Modern economies like to believe they've escaped history. Better data, better models, better institutions. But his core insight cuts through that optimism. The cycle doesn't disappear. It accelerates. Asabia today looks like trust in institutions, confidence in currency, belief in rules. When those are strong, growth feels natural. When they weaken, everything becomes short-term. Extraction replaces contribution. Debt becomes a substitute for cohesion. Modern states don't just tax. They borrow. They inflate. They defer cost into the future. For a while it works. Confidence holds. But the underlying logic hasn't changed. The system is still consuming future output to maintain present structures. Eventually, arithmetic catches up. And this phase is the most dangerous, because it feels stable. Ibn Khaldun would recognize it instantly. The stage where systems appear strongest and are most fragile. The cycle doesn't require bad intentions. It requires normal behavior under success. Each step feels justified on its own. Only when viewed together does the pattern become obvious. Financial markets amplify this. Asset prices rise faster than real productivity. Speculation outpaces contribution. Wealth becomes detached from cohesion. And when corrections come, they don't just reset prices, they test belief. Who trusts the system? Who expects protection? Who carries the cost? Ibn Khaldun understood something modern systems forget. Legitimacy matters more than force. States can compel compliance for a time. They cannot compel productivity forever. When people no longer believe the system works for them, participation declines, innovation slows, risk-taking collapses. The economy contracts, not because resources vanish, but because cooperation does. And here's the part that unsettles most people. Ibn Khaldun didn't promise escape. Decline, in his view, is not a failure of intelligence. It's a consequence of success. The same forces that build wealth eventually undermine the conditions that made it possible. So what does that mean for you? Perspective. Understanding cycles doesn't make you immune, but it changes how you interpret the world. You stop mistaking peaks for permanence. You stop confusing scale with stability. You recognize incentive shifts before headlines do. Real financial awareness doesn't come from prediction. It comes from humility. Systems are temporary. Confidence is fragile. Cohesion is more valuable than any asset class. You don't need to outrun the cycle. You need to stop being surprised by it. Ibn Khaldun didn't predict the future. He removed its mystery, and once you see the pattern, it's hard to unsee. History doesn't repeat because people are foolish. It repeats because incentives don't change. And beneath every market, every state, every financial system, lies the same fragile foundation: trust. When it holds, prosperity follows. When it fractures, decline begins quietly, long before anyone wants to admit it. If this gave you a new perspective, hit subscribe. History has the answers. I'll show you where to look.